If I was starting in crypto right now, in Q4, just after the biggest crypto liquidation we've ever seen, with my last $10,000, this is exactly what I'd invest in. And it's not Bitcoin, because here's the truth. Bitcoin's already done its part. It's pulled in the institutions, it's brought the confidence into the market. Also, it's Q4 of the post-halving year. And this is the short period where the Bitcoin dominance falls off a cliff and the altcoins have their parabolic run. Or at least some of the altcoins. In this quarter, I'm also not betting on BNB or the perp dexes or the meme coin metas, because the truth is that run's already happened. I'm betting on what's coming next. 5 narratives, 10 coins, 3 months. That's it. That's what my Q4 looks like if I'm coming in with my last $10,000. This is how I capture and multiply the upside that's still on the table. I'm Crypto Man Run, and I've been here for 3 crypto cycles. I work with a team of 20 of the best researchers in crypto. These are young, smart guys that are deep in the trenches, and they have their finger on the pulse of every single narrative. They called this correction perfectly. They know what's going to run, and they know what's already run. I mean, just look at this. We caught Asta at 7 cents, and we made 30x with our community. We caught BNB at $600, and now we've still almost doubled our money. We caught SQD at 5 cents, and right now, we're more than 5x up. And if you look at our Frontrunners private Discord, it's the most accurate and highest hitting group in the space. Now listen, if you want in, there's a link below, and if you do join, you get a 30-day money back guarantee. If it's not the best group in the space, just cancel and you'll get your money back. But if it is, stay with us and get rich with us. So listen, in this video, I'm going to show you exactly how I do it. Exactly how I take my last fresh $10,000 and buy 10 coins for Q4. But first, let's look at the Q4 setup, because it's playing out perfectly. It's the post-halving year. We just had a big correction. We just had a big liquidation wipe, and the markets have been reset. We also just had a green September. The last 4 times that this happened in Q4, every single time was a banger. In 2024, we had a green September, and we gained 48% in Q4. In 2023, we also closed green in September, and we gained 57%. In 2016, we gained 58%, and in 2015, we gained 81%. It's not just historically the strongest stretch of the year. This time, it's also loaded with a whole lot of new catalysts that are going to supercharge this market. If you want to know why this is going to happen or how big Q4 will be, check out the video I made last week. There's a link in the description. And even though the market has just corrected and we had a big liquidation, let me tell you that according to the data, the M2 money supply is exploding, and global liquidity is now flooding into risk assets faster than anything we've ever seen. It could be because countries need growth. Or it could be because the Japanese Prime Minister-elect is promising stimulus and rate cuts. It could also be because of the Trump stimulus check talk. Either way, the M2 money supply is going parabolic, and Bitcoin follows this chart with an 80-day lag. This is what it looks like. You see the next move? It could also be because of the catch-up trade to gold. Gold's had the best year it's had in 40 years. It's up nearly 53% this year. And Bitcoin usually lags gold by 100 days. You see the next move? Just look at silver. It's breaking a 50-year cup and handle. And the last time silver broke, just look at the results. You see the next move? It could also be just because we just began the rate cut cycle in the Trump presidency.
And in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
Powell finally buckled, and we're starting to get the rate cuts. And the data shows that this year, there could still be 2 rate cuts on the table. You see the next move? And it goes even deeper, because in May next year, Powell's out. It's the end of his tenure. And Trump has already selected his man. His name is Stephen Mirren, and he's super dovish. He's all about fast rate cuts, and you know what? The market knows this. You see the next move? Look at the ETF and DAT inflows. They're accelerating at a record pace. Institutions are all over DATs and ETFs. The mix of cheaper money, expanding liquidity, and institutional flows, that's something we've never seen in crypto. And even though we've just had a really big correction and retail got liquidated, the institutions weren't really touched. You see the next move? And Bitcoin's already breaking out. It's already pulled the money in from the TradFi system. And now, the liquidity is going to move down the stack. So don't be fooled by the panic. From Bitcoin, it's going to go to ETH. From ETH, it's going to go into Sol, and then it's going to go into all the altcoins. Especially the altcoins that are about to get the new ETFs approved by the SEC. You see the next move? That's the phase we're entering into now. The rotation window. Right in the beginning of Q4 when the data told us this would happen. So how do you maximize this? How do you multiply your portfolio? It's not about trading, guys. It's not about jumping from coin to coin or from narrative to narrative. It's actually about capitalizing on the recent dip. It's about 5 narratives, 10 coins. 5 narrative, 10 coins, buy and hold for the quarter. Simple. So here's the breakdown. First, let's look at the narratives. I'm only playing 5 narratives in Q4. 5, that's it. No jumping around, no chasing shiny objects. 5 narratives that I have massive conviction in. Here they are. So the first one is the L1s. You can't fade the L1 trade. It's always the first trade that leads. First it's the L1s and then the rest follows. So I'm buying L1s. And the L1s that I'm buying, well, they're not Bitcoin or ETH, let me tell you that. Then it's what I call the cash cows. What is this? Well, it's a simple narrative that Wall Street easily understands. Why? Because it's tokens that make money, generate cash, and use the cash to buy back their tokens. It's a no-brainer. Like, you have to own this. After that, I'm looking at privacy. Because if we want institutions to trade our assets, they ain't gonna let others see what they're doing. Let me tell you that. And so, we need privacy. And now with an SEC that's pro-crypto, they are going to push privacy, and privacy is going to explode. Then it's the trading platforms. Because more and more people are seeing my thesis. If blockchain is the creation of digital value, people are going to trade. Because that's what they do. It's human nature. We've been trading for centuries. And if they do, I want to own the most innovative and profitable trading platforms out there. Lastly, I'm looking at what we call creator economy plays. Why? Because what pump.fun showed us is that the blockchain creates the ultimate platform to reward creators. And I want in on this. That's it. 5 narratives. No bullshit, no meme coins, no distractions this time. 5 narratives. Now look, I do want exposure to stablecoins, and I do want exposure to robotics. But what you'll see later is that I'm going to get that in my token selection. Otherwise, it's 5 narratives, that's it. And you know what? If I'm bored late at night and if I need some dopamine, I may hit the trenches from time to time. Well, it's either that or I'm going to bet on the bagel cutting competition.
Das ist
Perfekt.
Boah,
Das ist
genau.
perfekt.
But this is my core portfolio. So now let's look at the actual tokens. 10 tokens in 5 narratives for the last quarter. First, it's the L1 narrative. And as I said, it's not dead. In fact, it's always going to lead. And I'm not going to be buying Bitcoin or ETH because that's not where the action is. I'm going to go straight into Solana and into Sui. Why? Well, because Solana is the biggest chain. It has the most users, the most apps, and it has the most revenue. It's also about to get an ETF that's going to unlock the TradFi flows. Unlike ETH, which has already had this for months, right? When it comes to DATs, Solana has the best DATs in the space. Kyle Samani is running one. Mike Novogratz is running one. Dan Moorhead, one of the most prolific crypto investors in the space, he's running one. And even my good friend Marco Santori is running one in the East.
We've really seen such a rise in these digital asset treasury companies.
To me, the Sol setup is so obvious. And if you look at the chart, it still has yet to break its all-time highs. Solana remains my anchor. It's the engine for the rest of the market, and it's one of my highest conviction plays going into Q4. Then I'm putting money into Sui. Why? Because every cycle has a breakout chain. And this time, it's shaping up to be Sui. But it's not only about that, because Sui also has a very unique technology. It's what you call an object-based technology, not an accounts-based technology. And this technology is perfect for AI and for very fast transactions. Right now, it may not have Solana's numbers, but they're building a tooling stack that makes them more usable and robust than most other chains.
This team had like one mission statement at Libra, which was to roll out a crypto network to 3 billion users at the time. And they took that same mission when they left and they created Myston Labs, which has built Sui. So what you get to buy into is probably the most advanced crypto team in the market who's building a network for true internet scale.
They built an on-chain storage protocol called Walrus. They've got Deepbook for on-chain liquidity, and they're building a whole lot of others. They're also tackling quantum computing or quantum resistance right now. And that's something that not many blockchains have the skills to do. Developer traction is growing in the last couple of years. It's not as big as Solana, but it is growing faster than any L1 out there. And here's the part that's making me double down, right? Sui just flipped deflationary. Its storage fund has already permanently removed 700 Sui from circulation. And that was in just the first month. They're going to carry on doing this because they recently announced rolling out a Sui stablecoin called Sui USDE. And the revenue from that's going to be used to buy and burn Sui tokens. Every time users move stablecoins around, the volume flows through the network, and the activity is used to buy and burn back tokens. There isn't another L1 that has a flywheel like this. Not Solana, not Ethereum, not BNB, nothing. Sui has literally built an on-chain reflexive engine. So I feel I'm early, I feel the chain's underpriced, and it's got the ultimate reflexive token mechanism. And that's why I'm buying it. So here's a list of my favorite cash-generating token guzzling projects. The first one is pump.fun, and it's a pretty simple narrative. Quite simply, they are the most successful app in crypto, and they now have $2 billion in cash. They're not taking on the crypto industry. They're taking on the big media players. They're going after Meta. They're going after WeChat. They're going after YouTube. And what they've done is they've created the most sustainable revenue wheel that I've ever seen in crypto. And they're using that revenue flywheel to reward creators. If they do crack it, we're talking tens and even hundreds of billion. And if you look at the chart right now, it's priced at 6 billion. So it's not rocket science, it's just a simple risk-return play. Next, I'm buying Aerodrome. I need exposure to Base, and Base don't have a token yet. What they do have is they have a DEX, and the DEX generates huge cash. And what does it do with the cash? Well, it buys back its own tokens. This token also has two other big narratives this quarter, and no one's talking about them. First, the Base app launches in November. This is an app that's going to give 25 million Coinbase users access to the Base chain overnight. And what's going to happen when they arrive on the Base chain? Well, they're going to trade. And I don't really care what they trade because the DEX will capture all the volume. The next catalyst for Aerodrome is not public. So listen, guys, you really can't share it. I have information from insiders that Aerodrome is about to merge with the biggest DEX on Optimism called Velodrome. And this could be very, very bullish for Aerodrome holders. Now remember, this is not public yet, so please don't share it unless you're sharing with subscribers in the channel. And listen, if you're not already subscribed, I suggest you subscribe because I have a lot more inside info which I share here. My next cash cow is Athena. And it also plays into the strong stablecoin narrative which I mentioned I wanted to get in at, right? Athena is a volatility machine. It's a stablecoin that gets its returns from bullish funding rates. And when it does, the yields are high. So in an environment where rates are dropping and TradFi is starting to understand stablecoin and looking for yields, well, Athena is going to be the big winner. Because if you look at Q4 is all about bullish volatility, and bullish volatility is all about high funding rates. Athena also makes money as a protocol. And what does it do when it makes money? It uses that money to buy and burn tokens. It's that cash cow buyback mechanism that I'm looking for, right? And so for me, Athena is another no-brainer. My last cash cow is 𝗙𝗃𝗏. 𝗙𝗃𝗏 is Solana's biggest staking platform. It's not only a staking platform though, it also captures the lion's share of the Solana MEV. And what does it do with the miner extractable value? It redistributes it to the holders. And so right now, as institutional staking grows, and with the Solana staking ETF imminent, well, what's going to happen? 𝗙𝗃𝗃 is going to explode. And it's also a cash cow. It makes cash, and what does it do with the cash? It buys back its tokens. It fits in perfectly with my narrative play. And so 𝗙𝗃𝗃 is another slam dunk. My next big narrative is privacy. Now, up until now, privacy has been a swear word in crypto. And that's because we used to have a hostile administration. But now things have changed. And not only do we have a pro-crypto administration,
this afternoon I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world.
But this administration is actually promoting crypto. And this administration understands that privacy is a right. And that if we want institutions in our space using crypto, they're not going to show all their transactions. I mean, you can't expect JP Morgan to let Goldman Sachs know exactly what they're buying and selling, right? And so privacy is a no-brainer. But it's not any kind of privacy. It's what they call optional privacy or compliant privacy. It's not about every transaction just being private because you want to hide. It's about giving users the option of what they want to show and what they want to hide. And that's why we call it more compliant privacy. Now, without getting too technical here, I'm going to play 3 tokens in this space. The first one is Zcash. It's like Bitcoin, but it's got built-in optional privacy. Users can decide what they want to show and what they want to hide. It also has a similar structure to Bitcoin. It's got 21 million tokens, and it's got very similar emissions. And it's already started to run because big names like Naval have been pushing it. But even after the run, it's only got a $3 billion fully diluted market cap. Naval's thesis is that some people are in crypto for the money, and others are here for the privacy. And I think he's right. If that's true, then Zcash could have 100x potential from here. And even if it went up 100x, it would still be 1/10 of the size of Bitcoin. So that's why I'm buying Zcash. My next play in privacy is called Starknet. Why? Because the founder of Starknet, 𝗙𝗵𝗫𝗀, was one of the first founders of Zcash. You can think of Zcash as private money, and you can think of Starknet as a programmable private smart contract chain, just like Ethereum, but with privacy. And I want to own both. I want to own the money, and I want to own the chain. Lastly, in privacy, I'm putting some money into 𝗘𝗃𝗃. It's a very risky play, and it's much smaller. But I've got an angle here. Why? Because they have a very unique privacy technology called garbled circuits. It's a breakthrough in computing, and there's not many other blockchain protocols using this. What it does though, it allows for computation of private data while keeping it private. Let me give you an example because it sounds complicated. Imagine you have medical records and you want to keep the data hidden. But at the same time, you want to be part of a research study to determine the effect of the drugs. How do you do this without actually sharing the data? Well, that's the breakthrough. That's garbled circuits. Now, as I said, 𝗘𝗃𝗃 is much smaller, but it's really cheap, and so the risk reward here is good. Either it's going to work or it's not going to work, and 𝗘𝗃𝗃 is going to stay where it is. Next, I'm moving on to trading, because trading isn't going away. As I said before, if blockchain is really about creating value, humans are going to trade it. That's human nature. And when they do, I want the fees. So yeah, I've got 2 plays when it comes to trading. The first one is Hyperliquid. It's the leading perps DEX. It has most of the users, most of the volume, and it's making most of the revenue. It's the ultimate cash cow. And what are they doing with the cash? Well, they're buying back their tokens. And so it's another one of my cash cows. It hits my trading narrative perfectly, and it hits my cash cow narrative perfectly. And so I'm buying it, even at these levels. And I know what you're thinking, But Ron, what about CZ and Asta? I do hold some Asta, but I'm not mad about shiny objects. And I think that Hyperliquid has the best traction, the best volume, and has the best experience. And so I'm sticking to the winners here. My next trading play is Drift. Why Drift? Because Drift is a derivatives play on Solana. And Solana is the chain that launches most of the tradable tokens. Drift will be the place where most of the value will be captured from all the launches on Solana. Up until now though, Drift has been focused on decentralization. They took a bet that in the long term, decentralization will matter. And so in the short term, their DEX performance wasn't great. But in November, there's going to be a massive upgrade coming. And when it does, Drift will match the execution speed of Hyperliquid. And that'll change everything. Drift is also relatively cheap. It's about 50 times cheaper than Hyperliquid, or even more. You get where this is going? I'm taking a risk-reward play here. I've also got an amazing pick for you in the creator space. Well, actually it's a double whammy because it gives you exposure to the base chain that doesn't have a token yet, and it gives you exposure to the creator space. Now let me let you in a little secret. I spoke to the team from Base the other day, and they told me, in confidence, that the Base app is launching in November. And when it does, 25 million Coinbase users will have a new app to onboard into Web3. Now, very confidentially, the main app and focus of the Base app will be Zora, simply because there's nothing else to trade on Base. What is Zora? Zora is an app that allows creators and influencers to launch their own tokens and monetize their content. You can imagine it as what would happen if Instagram and pump.fun had a baby, and I'm buying this baby. So that's it. 5 narratives and 10 tokens. But with these 5 narratives and 10 tokens, I'm covering all my bases. I've got L1s, I've got trading, I've got privacy, I've got cash cows, and I've even got a sprinkle of culture. I've got like a full stack Q4 portfolio. I have exposure to everything, and I have exposure to Base just before the launch of the Base app. My portfolio is covered. I'm balanced. I'm diversified. So that's why I made this video now. I made this video now because we just had the correction, and I think it's time to deploy my last $10,000 if I was coming into crypto right now. And I'm positioned exactly where the next wave of liquidity is going to hit. And best of all, I'm not playing historical narratives anymore. I've sold all that trash. I'm moving on. I'm looking forward. I'm not looking backwards. Because the money in crypto always moves the same way. First it's Bitcoin, then it's Ethereum, then it's Solana, and then it's all the new narratives built around that. And right now, we're right in the middle of that rotation. So don't chase what's already run. Be positioned to where the capital is about to arrive. Now listen, if you enjoyed this video, smash the like button, subscribe to the channel, and I'll see you again in the next video. Until then, trade well, my friends.